Well, one particular sector of the market that's been rallying and that's seen a complete re-rating since the start of June has been the power sector. In fact, power stocks have been on a continuous surge in the past many days. In fact, a lot of the stocks have gained in excess of 10% just in the month of June itself. We at ET Now have spoken to multiple dealers, multiple market participants, analysts to understand what exactly is driving the rally in shares, what exactly is driving the complete re-rating scene across power stocks. And this time around, both the PSU as well as private stocks, private power companies, both utility as well as Discoms, private as well as PSU stocks, all of them are seeing significant proportion of re-rating coming in. Multiple triggers are playing out, none more than the fact that there is clearly an indication of a sectoral rotation that is visible. Along with that, also significant rally happening in terms of power consumptions as the economy unlocks as well. So significant demand momentum seen. Number one, demand has increased significantly as the economy recovers slowly. Demand improvement is quite significant despite the fact that optically we will be looking at the numbers, they will be higher, but despite the lower base effect, the demand momentum is intact, is quite strong. Recovery has been better than what some of the analysts were anticipating. Also, one of the biggest worries for the entire sector has been the fact that the outstanding dues from Discoms always were very high, and there was always a worry of how exactly these particular dues would be cleared. However, the liquidity infusion from REC PFC is something that has clearly reduced the kind of dues that Discoms have been grappling with. Along with that, significant improvement is seen as PLF trends. We understand that PLF trends that were hovering around 50% a couple of months ago has now reached levels of close to 65%, which is quite strong. We also understand that in the first week of June, the power demand consumption went up by close to 12%, indicating a very strong demand recovery. Industrial as well as commercial power demand saw very sharp recovery. And one of the key triggers has been Tata Power's efforts to go ahead and give and get significant value unlocking done as far as its renewable power portfolio was concerned. We understand that Tata Power has shelved that plans of going in for an INVIT as far as the renewable power portfolio is concerned. Rather, the company is mulling options of an IPO. Now, this leads to a twofold improvement. Number one, the IPO gives better visibility for investors, and also not only that, when you're talking about valuations, given the buoyancy seen as far as the primary market is concerned, we understand that valuations for the same business of the renewable power portfolio can be much higher compared to the INVIT that the company was earlier mulling. Along with that, the company has significantly reduced debt, deleveraging plans are intact, and along with this, the valuation comfort that a lot of these companies enjoy is something that is also aiding the rally as per the ET Now feedback that we have received from multiple dealers and analysts.